Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, it's James with the Chart Guys. It is Tuesday, March 14th. Going to do my nightly video on gold. So yesterday I said I took my profits in the miners bounce because I just didn't see the confidence in gold bulls really with that miners bounce. And seeing the gold weakness, it just gave me a lot of concern, and rightfully so. If I hadn't taken my profits yesterday, I would have absolutely got caught in that dump. And yesterday's video, I said to make sure to watch this 20 MA on this daily with the TCG bear cross to see if it rejects here. I said there would be some red flags if we get above it and close above it. And now we're closing above all these exponential moving averages, the 4 and the 8. And if we continue for another green day tomorrow's FOMC could bring anything, but if we continue green tomorrow and we get above the high of today, and this high here of 102.25, that's really a red flag for gold bulls, as you'll get another TCG bull cross here, and you could see some higher highs after just a couple days of consolidation, pullback here. We had a bullish reversal yesterday, currently being confirmed. FOMC, I'm not going to guess what happens. Anything could happen. So these are the red flags to watch out for that I highlighted yesterday. Obviously, once it close above the 20 MA, that's another red flag here on the US dollar. Now looking at the gold daily chart, we've consistently on this bounce, we had a bullish reversal, but we rejected at this 4 EMA, another rejection today at the 4 EMA. So the levels I'm going to watch for tomorrow on gold during the FOMC or beforehand is the low of this candle, 1194.5. That is a bear break, and a bull break now that we have a high here would be a bull break of 1210.90. So a bull break of 1210.90 would be good for the bulls, and it looks like if we break that, it's going to coincide with this 8 EMA. And so if we're able to break this, then we could get a support being regained here at the 4 EMA. Break below this, the low of 1194.50 is big time red flag for the gold bulls. So that's something to watch for in the FOMC tomorrow. On the hourly chart, gold is not oversold yet. And yesterday, again, another thing I highlighted yesterday was this 50 MA and the 20 MA, to which way to play it. So today at the open, we did have 20 MA support, but we got above this 50 and kind of got faked out here. This was kind of a concern here, this big bullish reversal flag. And once we lost this 20 MA that I highlighted, the 50 MA first, obviously, and then once we lost this 20 MA and got this TCG bear cross, you can see the absolute dump we had, and the bull miners full out dump today, and also the bear miners had some nice upside. So the levels to watch for tomorrow, again on the daily time frame during the FOMC, is the high of 1210.90 and the low of 1194.50. And I can't really guess what's going to happen in the reaction of gold to the FOMC announcement, but if I were to give my, this is all just theory, and I wouldn't go on my theory. I'd rather play the technical analysis on it. But gold's dumped here, and everyone's expecting a rate hike, obviously. So to me, this tells me that the rate hike's already been priced in. And if the markets do what they're expecting the FOMC to do and hike rates, I don't see much more downside potential. I don't think we're going to see another all-out dump here. But if the FOMC does something that the markets don't expect, you could see potentially a lot more upside. So all I'm saying is that the upside for something unexpected is greater than the downside for something that happens that's expected. So again, watch these levels closely tomorrow. The low here of 1194.50 and the high of 1210.90 to see which way the gold bulls and bears react. As far as GDXJ goes, what we have here is a loss of the 8 and the 4 EMA. I said that this 8 EMA must be a hold on any back test. Losing both of these is a big time red flag, and that basically negates any type of TCG cross where the 4 and 8 EMA could have possibly crossed over here happening. And so you're going to have to see a big red day, big green day tomorrow to negate this candle today. And it is on increasing bear volume, which is also a concern. So how to play miners tomorrow, what I would see is just use the daily candle. Break above the high today would be a bull move. Break below the low, you're going to see more downside. And then must hold the low of 32.66. If we break above this and then get above the previous day candles, the high of this bounce of 36.35 would be a bull move and likely to regain a TCG bull cross and then test this 20 MA. So I'm not going to guess, as I said, and I would wait for the reaction of after FOMC personally, based on technicals. But technicals are pointing bearish. My sentiment, based on seeing how much gold is down, I'm not saying the reaction of gold is going to be bullish or bearish, but I think the reaction to gold the bull reaction would be a lot bigger than a bear reaction, depending on what the FOMC says and does. So again, watch the US dollar. The dollar is recovering very nicely, and when I saw the warning signs of gold yesterday of showing no strength on the dollar weakness, and even today, the USD, JPY, intraday, when it was dumping, gold didn't do much to show me any strength. So I'm not convinced with the gold bulls yet. I think a lot of it is waiting for the FOMC and what they announce. And right now, the technicals are saying bear miners are the play. But again, my sentiment is that the upside and downside for gold is much greater to the upside than the downside, with it already being baked in for a rate hike. So have a good night. Watch those gold levels. The recent, I'll show it to you guys one more time. I'll keep re-emphasizing this. Watch for the gold levels here on the daily. Bull break gold will be 1210.90. Bear break is going to be 1194.50. So safe bet is to wait for the FOMC and see how gold reacts. And generally, I like to give it 30 minutes to see the reaction, because I've seen big dumps in gold only to be bought up. I've also seen huge spikes in gold on FOMC only to be brought back down. So give it some time, watch these levels closely, and I will see you guys tomorrow.